In crypto, the loudest month of the year is brewing. Everyone is waiting for the Fed's decision, everyone is shorting, everyone is convinced that September will be red. But history always punishes the majority. When the market is too one-sided, an explosion happens. September could become the month when the market suddenly redistributes capital. Many will take losses, while others will gain the advantage. If Bitcoin closes a green month, altcoins could enter a phase of powerful moves that set the rhythm of the market. And today, I'll show you all the signals pointing to that. So make sure to subscribe, leave a like, and let's dive in. Friends, before we move to the market overview and the coins, please note, this video is not financial advice. It's only my personal impression and view of the market. Always do your own research and invest wisely. September is the key month for all of crypto. And it's not only about history or calendar patterns. The main intrigue is the Fed meeting on September 16th to 17th. That's where the market expects the first rate cut after a long cycle of tight monetary policy. And that moment could set the tone not just for crypto, but for all global markets. To understand the scale, let's go back to August. It became the month of altcoins. Total 2. The combined market cap of all alts, excluding Bitcoin, rose nearly 19%. That's a big move for a market with over $1.5 trillion capitalization. Meanwhile, Bitcoin itself dropped 6%. Its dominance fell by 6.8%, a clear signal that capital began rotating into alts. Ethereum took the lead, showing plus 32.5% in just 1 month, effectively becoming the locomotive of this move. Alongside it, coins like OKB and CROW gained strong positions among the top performers. But not all alts joined the rally. TON, XRP, Pepe remained weaker, which is important too since the rotation is still uneven. Now the market has frozen in anticipation. All eyes are on the Federal Reserve. Why does this matter? Because any news or even Powell's hints are already moving prices. And the big thing, most participants are convinced September will be red. History gives them arguments. In 2013, 2017, and 2021 September always closed negative. But the historical cycle already broke in August. A month that usually closes green this year turned red. On top of that, the liquidation map shows a massive imbalance. $17 billion in short positions against just $3.7 in longs. That's a 5-to-1 ratio. In other words, the market is overcrowded in one direction. And when that happens, most often we see a counter move. First, don't try to guess the Fed's decision in advance. It makes no sense. The market is already shaking from every hint, but the real move will start only after the announcement. Wait for the fact and act accordingly. Second, if Bitcoin manages to close a green month, that will be the signal for alts to accelerate. Remember, altcoins always move with a multiplier. They are faster and more aggressive than BTC. And also, forget about sacred patterns. Yes, historically, September has often been red, but this August already broke the 4-year cycle. Past patterns don't work without considering how positions and liquidations are structured right now. So here are 5 concrete steps for September. Be psychologically ready. Volatility will be insane. The market can kill both longs and shorts. Stay calm and don't trade emotionally. Reduce leverage and risk. Example: lock some profit and open a small hedge. That way, you reduce pressure on your deposit, but keep flexibility. Clean your portfolio. If you hold coins you don't really believe in, bought just because someone said so, now is the time to cut them. Hold only assets you truly trust. Confirm your strategy and stick to it. For me, that's buying more Bitcoin at pre-marked support zones. You may have another plan, but the key is to follow it, not jump around. Watch the Fed's news and rumors carefully, but don't trade them. That's just noise. Wait for the actual event, then decide. If you follow these simple rules, September's chaos and liquidations can become an opportunity for those who act carefully, while others may suffer losses. And now I want to talk about some patterns and indicators that show the real state of the market and will be the signals confirming the bullish setup. By the way, I always share the freshest Fed updates and other critical news in my Telegram. If you're not there yet, subscribe so you don't miss a single key event. The link is in the description of this video.
Nice.
Friends, and here's where it gets really interesting. Before we even get to specific altcoins, I want to show you a few extremely important indicators. These are the ones that may be signaling that the market is creating conditions for an altcoin rally. Believe me, skipping this section would be a huge mistake, because if you understand these patterns, you'll be able to navigate the picture better even before the market suddenly shifts sentiment. And at the end of the video, we'll talk about the coins that could deliver the biggest moves. But for now, let's break down the indicators that right now are suggesting alts are getting ready to launch. Let's go. Here are 5 indicators that right now are hinting that alts are catching some oxygen. I'll explain simply, but like adults, what to look for, how to read it, and where the traps might be. Indicator number 1, BTC dominance on the monthly chart. We start with the risk barometer. A long uptrend since December 2022 kept dominance above trend. And right now, we're seeing rejection from the 60 to 65% zone and a break of this support. Why does this matter? Because when dominance breaks an uptrend on the monthly, capital doesn't flee crypto. It rotates into ETH and alts. What's the confirmation? A monthly close below trend, and ideally a retest from below, turning support into resistance. A fake out would be if the candle closes back above trend and breaks the lower highs-lows structure. In that case, pause the rotation thesis. Indicator number 2, MACD monthly on dominance bearish cross. MACD on the monthly doesn't flash every week. It's a slow pendulum. When the signal line crosses downward and the histogram turns negative, we usually get months, not days, of declining BTC dominance. This often means investors may be hunting for riskier opportunities. Confirmation: the cross holds on the monthly close and the histogram stays red. If the end of the month pulls the candle back up and the lines uncross, don't chase, wait for the next close. Indicator number 3, RSI monthly on dominance turning down. RSI on the monthly clearly caught momentum loss back in 2021 when the alt mania began. What we want to see now, RSI rolling down, losing trend strength, and ideally falling below the 50 level. This isn't about overbought, oversold at the bottom. It's about loss of inertia in dominance. Bonus confirmation, bearish divergence. Dominance makes a higher high, RSI a lower high. Invalidation, a sharp V-shaped bounce in dominance with RSI reclaiming previous peaks. Indicator number 4, Ethereum to Bitcoin ratio, breaking downtrend and fighting for 0.04. When ETH starts outperforming BTC, the market usually shifts into risk-on mode. After a long, painful bleed, the Ethereum to Bitcoin ratio pair has broken out of its downtrend and is approaching the key approximately 0.04 level. Historically, holding above 0.04 has created conditions for moves towards 0.045 to 0.05, the exact zone where alts caught their breath in past cycles. The backdrop supports this picture. Institutional ETH narrative, ETF flows, RWA, stablecoins as infrastructure. Risks? If BTC pumps vertically on its own, Ethereum to Bitcoin ratio can still drop even while USD charts for alts look green. Don't confuse relative strength with absolute. Indicator number 5, MACD monthly on ETH. First bullish cross in years. This is the slow signal we last saw mid-2020, and that led to a multi-month uptrend. A bullish cross on the monthly after a deep base signals a change in long-term momentum, not a just-for-show bounce. Confirmation: green histogram for several months in a row and candles with higher lows. Invalidation: a quick breakdown of the cross back into the red next month, and a failure at 0.04 on Ethereum to Bitcoin ratio. What does this all mean? When at least 3 out of 5 light up at the same time, dominance breaking trend and closing below, MACD on dominance in the red, RSI rolling down, Ethereum to Bitcoin ratio confirming above 0.04, and ETH's MACD flipping green, that's not noise. That's a rotation scenario. And in past years, this setup often came with months where ETH and alts outpaced Bitcoin. Sure, no guarantees, but if this combo shows up on the monthly close, it's the strongest alt rally setup in years. Next, I'll show you which coins logically ride this wave and how to build a position to use momentum instead of chasing it. So don't go anywhere and make sure you watch to the end. By the way, if you're not yet subscribed to my YouTube, now's the time. Because here you definitely won't hear me talk about some shitcoins with no product. I don't cover garbage tokens that exist only for pump and dumps. Here we analyze only those projects that truly have the potential to perform, with strong fundamentals, real technology, and a future. Now let's get back to the market. Yes, it's filled with trash, but there are a few stories worth taking seriously. And we'll start with Say, a blockchain proving that an altcoin can be more than just a nice logo, it can have real use cases. Why Say? Because it's not just another L1, but a genuinely interesting case. Look, in July, they rolled out the Giga upgrade, and it wasn't just a checkbox update. Say received parallel execution, Autobahn consensus, and EVM compatibility. In numbers, 200,000 transactions per second and finality under half a second. This is no longer an experimental chain. It's infrastructure built for high-frequency DeFi services and trading. The market reacted instantly. After the upgrade, the token pumped plus 41%, with over 1 million active wallets and 2.8 million daily transactions. Then more. C's TVL in July broke past $680 million. For comparison, in February 2024, it was just $13 million. Now, 8.3 million unique wallets and nearly 1 million active addresses daily. This isn't a one-off spike, it's steady ecosystem growth. And what's most important, institutions are stepping in. Circle brought native USDC via CCTP v2. The state of Wyoming tested issuing its stablecoin on Say, a government pilot worth hundreds of millions. 21 shares already filed for a spot SEI ETF with staking via Coinbase custody. That's a clear sign of growing institutional attention. At the same time, integrations are rolling in. MetaMask opened Say to 100 million plus users. Ondo Finance launched tokenized T-bills on Say. Kryptonite integrated its AMM and staking modules. Even Anthropic entered with Model Context Protocol, allowing AI agents to connect directly to Say. On the chart, Say is in a symmetrical triangle between 0.28 to 0.30. Two scenarios: a breakout upward towards 0.70 to 1.20 if the fundamentals hold, or more consolidation. But fundamentally, they have everything for a breakout. That's why, when talking about alts with real potential, Say is definitely on that list. It's not a hype coin, it's a story about technology, institutional partnerships, and real use cases. Exactly the kind of project to keep on your radar as the market enters growth phases. Now let's talk about another serious player, Sui. And here it's not just yet another L1. This is a strong story sitting at the intersection of DeFi, institutions, and even Bitcoin liquidity. First, Bitcoin Fi. On Sui, the second phase of TBTC integration by Threshold Network went live. What does this mean? Sui now has infrastructure for real Bitcoin DeFi, lending, leveraged yield, and cross-chain flows. Demand is clear. Just on Alpha Lend, $10 million in TBTC was deposited, with nearly half immediately put to work. Today, over 20% of the network's TVL is Bitcoin assets. Second, DeFi growth and TVL. In August, TVL reached $2 billion, while daily DEX volume on Cetus and Bluefin climbed to $368 million. These are record numbers. In Q2, DEX activity grew another 20%. This isn't just speculative activity, it's systemic ecosystem expansion. Third, institutional level. Switzerland's Sygnum Bank became the first bank to officially offer custody and trading for SUI this summer. In Q4, they plan to launch Lombard loans backed by SUI. Earlier, Canary Capital filed for a spot SUI ETF. Step by step, SUI is entering the big leagues. Fourth, tech and architecture. The network handles over 100,000 transactions per second with enterprise-grade infrastructure. And it's no coincidence that SUI, alongside AVAX and Aptos, is considered a top candidate for mass adoption in 2025. Of course, risks exist. In September, tokens worth approximately $4.5 billion unlock. On September 1st alone, approximately 44 million SUI entered circulation. That can create volatility. But technically, the chart shows SUI forming a symmetrical triangle at $3.3 to $4.5. A breakout upward could push it toward $5.5, about plus 50 to minus 60% upside. And the most interesting part, some analysts already list SUI alongside Bitcoin and Cardano as a key institutional portfolio asset, meaning this is no longer a mid-tier alt, but a serious candidate for strategic capital. SUI today is a platform where several critical stories converge. DeFi with Bitcoin liquidity, banks and ETFs, enterprise-grade TPS infrastructure. The September unlock may be a test, but also an opportunity. And it's exactly these moments that determine whether a coin stays just another token or becomes a strategic asset. Another coin you can't ignore, Pyth Network. And here, it's not hype, it's a real breakthrough. First, in August, Pyth along with Chainlink was chosen by the US Department of Commerce to publish macroeconomic data on-chain, GDP, PCE, even real final sales. This was the first time in history government data was directly brought on-chain. Reaction was immediate. The token surged 70 to 90%. Daily trading volumes spiked plus 2,700%. Second, institutional adoption. Today, Pyth provides over 750 equity feeds, 50 plus RWA, and works with 100 plus blockchains. This isn't a DeFi toy, it's infrastructure for advanced products, derivatives, auto lending tied to economic indicators, and more. Yes, there are risks. In September, 2.36% of supply, approximately 236 million tokens, will unlock, and the anticipation already dragged price down negative 22.5%. But strategically, unlocks are always volatility points, not the end of the story. Regulation is also catching up. Since September 1st, Pyth has been officially recognized in Indonesia as an institutional crypto asset. And before that, they launched live equity data from the Hong Kong Stock Exchange, 85 instruments, with updates every 400 milliseconds. That's a massive upgrade for the RWA narrative. And the key point, positioning. Pyth now stands alongside Chainlink, but with a unique edge, direct access to government macro data. Analysts already suggest targets of 0.30 to 0.50 if adoption continues at this pace. So Pyth isn't just another Oracle token, it's an infrastructure bet on the future of DeFi, where government and traditional data blend with Web3. Stories like this happen once a cycle. Well, that's all for now. Remember, these are just my thoughts on the market, not financial advice. Always do your own research before investing. Thanks for watching. Subscribe, like, and stay tuned for more coin reviews. See you soon.